In this session, I will discuss data insights. I will also discuss how to present data to people, especially non-technical audience, that is people who are not data experts or who are not technically inclined. And I will also discuss how to apply the right analytical question to data sets. So what exactly is data insight? How does it differ from raw data or information? And what makes a data insight genuinely insightful? A data insight is a meaningful, actionable conclusion that you can draw from analyzing a data set, which means that what you're presenting as an insight has to be meaningful. It has to help someone make a decision. Here's a simple way to think about the difference between data, information, and a true insight. I'll use the example of a sales data set. Raw data is just numbers, it has no context. For example, when you say there are 450 units sold, that is it. It's just a fact, but it tells nothing on its own. It doesn't say if it is good or bad or normal. We have no idea. Information is data with a context. Let's say 450 units are sold in March 2024. Now we know when it happened. We could compare it to other months. That is useful. But that's still not an insight. A data insight goes one step further. It answers the why question and what next. For example, when you say that March sales rose by 30% when compared to February, it probably is driven by spring promotion campaign. You can also go a step further to say we should repeat this in April before the campaign budget expires. That is an insight. It has a context, a reason, and a recommendation. The text for a true insight is simple. The question is, could someone read it and make a decision? If you answer yes, then it's an insight. If the person still needs to ask follow-up questions, it's just information. Now that we know what an insight is, how do we know if it's a good one? I use framework called ARTS. Those are the 4 qualities that every strong insight should have. A is for actionable. A good insight leads to a decision or action. For example, you say sales drop on Mondays is interesting, but it becomes an insight when you pair it with, so we should reduce staffing levels on Mondays and reallocate those hours to Saturday. You can see that just saying that sales drop on Mondays, it didn't make any recommendation. It didn't suggest how to take action. R is for relevant. The insight must connect to something the business actually cares about right now. If your audience is focused on customer retention, an insight about packaging design is probably irrelevant, no matter how accurate it is. So think about objective here. T is for timely. Insights delivered too late are useless. If I tell you after the Christmas season that December was your peak month, well, yes, but what am I supposed to do with that now? Good insights arrive when there's still time to act. S is for specific. Vague insights are the enemy of good decisions. When you say sales are low, it's not an insight. But when you say third quarter online sales declined 18% compared to quarter 2 with the biggest drop in the 25 to 34 age group, that's specific enough for anybody to act on. So run every insight you produce through these 4 filters. If it fails any of them, go back and sharpen it. Finding a great insight is only half the battle. The other half is communicating it effectively, especially to people who don't live and breathe data the way analysts do, especially to diverse stakeholders who may not have the technical competence to dissect very complex data inputs. Here are the 6 principles I recommend. 1. Lead with the so what questions. Most people make the mistake of building up to their conclusion. They explain the methodology, they show charts, and then finally reveal the finding at the end. I want you to flip it. Start with the conclusion. For example, you can say our best performing customer segment is declining. Here is why and what we should do. That immediately will have the attention of the audience. Number 2, tell a story. Structure your insight like a narrative. Start with a context. What was the situation? Include the problem, like what changed or what went wrong. Add the finding. What does the data show? Then include your recommendation. What should we do? People remember stories far better than tables or numbers. Number 3, simplify the numbers. Numbers are often more persuasive when made human. If you say 1 in 5 customers churned last quarter, it lands much harder than 19.6% attrition rate. Use ratios, round numbers, and comparisons, which people already understand. Number 4, use the right chart. For example, use a bar chart for comparisons. Use a line chart for trends over time. Use a pie chart for proportions, but only with 5 or fewer slices. If you're using a pie chart, don't go into those 12, 10 slices. It makes it cluttered. The wrong chart can confuse or mislead even the best insight. Number 5, avoid jargons. For example, do not say we ran a multivariate regression analysis. Instead, you can say we tested which factors most influences sales. They have the same meaning, but one is accessible to everyone in the room. Number 6, end with a clear recommendation. Every single insight presentation should end with we recommend, I recommend, or I suggest. If people walk away without a clear next step, the insight has done only half its job. These 6 principles, they work equally well, even when you're writing presentations, you're writing emails or reports, even in one-on-one conversations. So these are not something that is drawn out from purely in an analytical lab. It can be used in every other aspect of daily conversation. So now let's get practical with this. Let's look at sales data set. Here I'll discuss with a sales data set and look at some 8 categories of analytical questions. Those are the kind of questions every analyst, sales manager, business leader should be asking. So when you include those type of questions in your paper, it helps to show you the direction you're going. It helps to see if you're meeting the objectives of the rubrics criteria. So let's say you're trying to discuss sales performance. The sales performance is a big picture review of your revenue of the revenue of the organization. There are key questions here. You can ask, what is the total revenue for the period? In fact, when talking about performance, starting with the total revenue for the period is a good help. It's a good starting point before you go into detail. The next question you can ask is, how do sales compare month over month or year over year? So this is where the trends will emerge. Looking at how sales compare month over month or year over year will help to see how the business is growing, where there is a trend, or whether the business is stable or declining. Year over year comparisons are particularly valuable when they strip out seasonal effects. The third question is, which products or services are the top performers? Knowing the revenue drivers is essential for resource allocation. So you want to protect and grow what is already working. For example, if you have items, some are growing, some are not growing, it helps to highlight those that are growing and highlight those that are not growing and highlight the ones that are stable or declining, so that the organization can decide the direction where they want to go. Fourth question you can ask is, what is the sales trend over time? Are there seasonal patterns? So when the person looks at your chart, they can see a clear upward trend with a peak. So in this example, we have this sales performance. You can see there's a peak in December. The seasoned analyst will immediately flag this as likely driven by seasonal demand and recommend building inventory and marketing spend well before fourth quarter. The recommended chart for this category will be a column bar chart like the one you're seeing here. You can see a clear upward trend with a peak in December. It makes month by month comparison effortlessly. The insight here is not just December is the best month. The insight is December revenue outperformed the annual average by 45%. We should begin campaign planning in September to maximize this window. If the objective you're looking at is customer insights helps in understanding who is buying from you, how much they spend, and how often they buy from you. Here are 3 questions you can ask. First is, who are the top customers by purchase amount or frequency? That is a question that is the foundation of customer segmentation, because you need to know your most valuable customers. That helps you to prioritize account management, loyalty programs, and retention efforts. The second question you can ask is, what is the average order value? The average order revenue is a very powerful metric. If the organization knows what it is and can increase it by even 10% through upselling, bundling of items, or minimum order thresholds, the revenue impact can compound quickly. The third question is, are there notable customer demographics that stand out? This could be age, or location, or industry, or company size. Demographic patterns can reveal untapped segments or flag at-risk groups. You can use them to look at what the age group that have been buying from you, or the age group that has been buying and they're no more buying, or the industry you have been serving. Is the industry growing or are they declining? Are you going to move to other industries? The recommendation chart for this is a horizontal bar chart, because the recommendation chart here is horizontal bar chart. It is easier to read customer names on the vertical axis than squeeze them onto the horizontal lines. You can also look at like using Pareto principle, something like often 20% of customers drive 80% of revenues. Does that match what you see in your data? What percentage of customers are driving the total revenues? Or what percentage of the products are driving the total revenues? Another category you can look at in a sales data set are the product category. So doing a product analysis will help you to understand what is selling and what is not, and why. Here are some questions you can ask. What are the best-selling products or categories? This question will help you to understand where demand is strongest, so you can prioritize your stock, marketing, and development resources accordingly. The second question is, you can ask, are there any products with declining sales that might need attention? A decline in sales is not always a reason to discontinue a product, but it always warrants some level of investigation. You can try to find out if it's a pricing issue, if it's a quality concern, if competitors are offering something better. The data will point you to the right direction. So the data points you have, you can use them to dig deeper. The third question you can ask here is, what is the inventory turnover rate for each product? Remember, high turnover means strong demand. But if supply can't keep up, the organization is leaving money on the table. Low turnover means capital is tied up in stock that is not moving. If you look at the example I have here, this stacked bar chart shows 3 categories of electronics, apparel, homes and garden. It could be more, but these are just for example. Now, across the 4 quarters, you see that electronic dominates and is growing. The home and garden is the smallest contributor. An insight here might be electronics accounts for 50% of Q4 revenue and is on a consistent growth trajectory. So increasing electronics inventory by 20% ahead of Q4 could yield an estimated XYZ amount in additional revenue based on current trend. That's the difference between a description and an insight. Descriptions tell you what happened. Insights tell you what to do next. If the question is on geographical insights, it means you're looking at the geographical area where the sales are coming from and where they're not coming from, or where you think they should come from. Here are the 2 questions you can ask. Which regions or locations generates the most sales? Knowing answer to that will drive decisions about where to focus the sales team's effort, whether the organization wants to open new offices or target advertising spend towards a particular geographical area. The second question of, are there areas with untapped potential or underperformance? A region with low sales is not necessarily a bad market. It might be an under-penetrated market. If you look at sales relative to market size or population growth, of your target market size, you can have a more useful picture of what is going on. If you're trying to present geographical data, the choropleth map will help. That's a map where regions are shaded according to their sales value. Darker colors will indicate higher performance. It's immediately intuitive for any audience. In this example, I'm using a bar chart as an alternative, which works well when the number of regions is manageable. If you look at the chart I have here, if you look at this chart, the insights from this can be Southeast generates 3.4 times the sales of Wales, but Wales has a comparable population. A targeted sales push in Wales could represent an increase in annual revenue opportunity based on regional benchmarks. To present a sales channels insight, you're trying to find out how customers are buying from the business and which routes the markets are more effective. One of the questions you can ask is, how do different sales channels compare in performance? Is it better in online, in retail, in wholesale, or direct sales? Understanding the channel performances will help the organization to allocate marketing and operational resource to the highest value routes. The second question could be, which channels have the highest conversion rates? This question is often more revealing than revenue alone. A channel with high conversion rate but low volume might simply need more traffic. It's already working, as you can see, but it just needs to scale. If you look at the clustered bar chart I have here, online generates the highest revenue but has the lowest conversion rate at just 3.2%. Meanwhile, direct sales generates only about 100,000 in revenue, but it converts at 18.6%. You can see that that's a fascinating tension. Online is high volume but inefficient. Direct sales is highly efficient but low volume. So an insight like this might just be what the organization need. So you can present it in a way to say direct sales has a conversion rate 6 times higher than online. Increasing direct sales headcount by 2 can generate an estimated XYZ amount in incremental revenue based on current conversion performance. So that would be a business case built from data. So to present an insight on marketing effectiveness, it means the organization is trying to understand whether marketing spend is actually driving sales, because sometimes there's a lot of spend and with the hope that it will drive sales, but we know that hope doesn't add to profitability. So one of the questions you can ask is, how do sales correlate with marketing campaigns or promotion? If you look at the data, if the sales spikes every time a campaign was run and returned to baseline when there was no campaign, that would be a strong evidence that marketing is working. If there's no correlation, that's a different, more uncomfortable conversation for the organization to have, because it probably just means that the marketing is not doing anything. The spend on marketing is not giving a reasonable return on investment. And this is one of the areas that marketing managers always struggle with. They are very sensitive about trying to understand the return on investment for each marketing effort. Of course, who will not be worried? You don't want to spend money in the wrong place. If you look at the bar chart on the left here, email marketing has the highest return on investment at 420%. followed by the SEO at 380%. Print and TV have the lowest returns. The line chart on the right shows a clear spike in both ad spend and sales in April and May. An example insight here could be email marketing delivers a 420 return on investment, 4 times higher than TV. Reallocating 30% of the TV budget to email will be estimated to generate an additional 180,000 in revenue at current performance levels. That's the kind of recommendation that gets to a marketing budget meeting and it will move very quickly. I want you to know that correlation is not causation. The campaign may have caused a sales spike or it may have been driven by seasonal demand. The good analyst question will be, what else changed in April? For insights on customer behavior, the organization is trying to understand when customers buy and what patterns exist in purchasing habits. There are 2 key questions here. First is, what are the peak buying times and days of the week? This has immediate operational implications. For example, staff scheduling, email send times, promotion timing, website server capacity are all of those that should be informed when customers are most active. Looking at the day of the week chart, you can see that Saturday is clearly the peak day. It's almost double Sunday's volume. So if you're running a retail or email business, if the organization is running a retail or e-commerce business, this tells them that Saturday is when they need to include full staffing and best live promotions. The hourly chart also shows that there's a clear spike at 6 p.m. That's the post-working browsing window. So if you're sending marketing emails, do they arrive at 6 p.m. or do they arrive at 9 a.m. when they are more likely to be ignored? Those are insights that you can raise for the organization. So an example insight in this scenario could be transaction volume peaks at 6 p.m. on Saturdays. Scheduling promotional emails to arrive at 5:45 p.m. on Fridays and Saturdays could increase open to purchase conversion by estimated 12 to 18% based on industry benchmark for time-sensitive offers. So you are giving a thorough insight here. You have told a story. You're telling them this is what may need to be done. And this is action that can be taken. You can also see that the Saturday peak in the week of day chart and 6 p.m. peak in the hourly chart has direct operational implication. For a profitability insight, you're not just looking at how much a business is selling, but you're also looking at how they're actually making the sales. The first question you can ask is, what is the gross profit margin for each product or service? Remember, revenue is just vanity. Profit is sanity. A product that generates, say, 500,000 in revenue, but only 50,000 in profit is far less valuable than one generating 200,000 in revenue and 150,000 in profit. The margin matters. Another question you can ask is, how do different product lines compare in terms of profitability? This question looks at portfolio thinking. Every business has a mix of high margin and low margin products. Understanding the mix will help them make strategic decisions about where to grow, where to invest, and where to rationalize. The right hand chart here shows that while revenue and gross profit grow throughout the year, the gap between them is the cost base, which remains relatively consistent. So an example insight you can present for this scenario is, licensing has the highest gross margin at 80%, but represent just 8% of total revenue. A dedicated campaign to cross-sell licensing products to existing hardware customers could shift the product mix and improve overall business margin from 53% to an estimated 58% within 12 months. Note that while the software and licensing have the highest margins, classical, high volume, low variable cost products, hardware has the lowest margin, which is typical. So if the goal is to grow profit, not revenue, you think about which product would they focus on. What if they needed to grow revenue quickly, regardless of margins? Think about what product they need to focus on. So in conclusion, there are 5 things I want you to remember from this presentation. Number 1, a data insight is not a number or a chart, it's an actionable conclusion. It's something that helps someone to make a better decision. If it doesn't change behavior, then it's not yet an insight. Number 2, use the ART framework to quality check your insights. Think about if the insight is actionable, is it relevant, is it timely, is it specific? If it fails any of those tests, then you need to go back and think it through. Number 3, communicating insights is a skill. You have to make it lead with the so what question. Start by telling a story, simplify the numbers, don't use jargons, and always end with a recommendation. The best insight in the world is worthless if the audience can't understand it. In number 4, I used sales data sets as an example because in many cases there are examples of sales data sets everywhere. So it will help you as you're trying to learn. There are many open data sets you can use, and many of them are sales data sets. They are rich with opportunity. They help you to identify some of these 8 analytical categories I discussed. Number 5, always pair your insight with the right chart. It means the whole world, that the visuals amplify the understanding. Present to the audience and not to yourself. Think about the audience. The right chart makes an excellent insight. It makes the insight self-evident. The wrong chart creates confusion. So that will be it from me for now. Thank you. Bye for now.